Okay, next we are look at GuocoLand. So the last round we also chose two real estate company. One is GuocoLand. Okay, so this is what GuocoLand does. Okay, they are basically developer, as you can see here. They are predominantly developers. So 81.9% of their revenue actually come from buy land, build houses, build apartments, build properties, and sell. Okay, and that's how they make money. They only have a very small part from rental. That means they are the property owner. And again, even smaller on hotels. They probably own just one or two hotels. So this is what is their business. So predominantly a developer. As you can see here, they operate predominantly in Singapore. 80.3% of the revenue come from Singapore. Malaysia is 13.2. Okay. Other places, not too sure where, 5.5. China, Vietnam is actually very small, as you can see here. Of course, this is actually based on the previous year's one. So this is where their revenue come from. Okay, the group registered revenue of 941.8 million for the year, 2% increase from year ago. So the revenue actually went up. So this is mainly for an increase in revenue from property development and partially offset by decline in revenue from hotel business. Okay, so in fact, property has been doing very well. So for your information, last weekend there's this special property launch, the One North Eden. One North Eden. So my friend was showing me, if I'm not wrong, most of the smaller units were actually sold before the half the day is gone. That is how crazy the property market is right now. I'm not sure where do people get the money, but it's like the property are really selling like hotcakes right now. Okay. Prudent capital management. So total loan and borrowing increased by 17%. to finance the new land acquisition at GuocoLand Street. Okay, the group net debt to equity ratio increased to 1, which is, yes, very prudent. Okay, healthy financial position, sufficient capital for funding future growth. Okay. Now, yeah, so in fact, this is the one that actually got me very excited. Midtown Modern has been, quite well talked in the real estate industry. I'm not sure you have paid attention. So in September 2019, the group was awarded land tender for 99-year leasehold site at GuocoLand Street. So Midtown Modern is the second residential condominium at Guoco Midtown, housed more than 500 luxury family apartments in a huge forest garden. Okay, and as you can see from the article, 90% of 1 and 2 bedder units at a weekend launch. This is how crazy our real estate market is. It's not cheap. Okay, so by the way, I just want to show some resources whereby you can find out information about property deals. You can actually go to URA website. How I come here is simply just www.ura.gov.sg. Okay, then you click on property market data. You can choose this price of private residential units sold by developers. So if you actually want to know how well are the developers doing, okay, so you can just type like we are looking at Midtown Modern, Midtown Modern, search. Okay, so you can see there is a total of 558 units in the project. The company launched already 447 and 368 are sold. Okay, 368 are sold. Okay, so launched but unsold is actually 79. Now, the median price is actually 2007. Okay, this is the median price. Cheapest per square foot, this is per square foot, per square foot. The cheapest per square foot is about 2003, and the most expensive is actually 4002 per square feet. Okay, so you can see that number one, the prices are not actually cheap. Okay, number two is they are selling very well. So in fact, this is the reason why, the real estate company has been catching my attention. Okay, so let's move on. Martin Modern, located at Robertson Quay Prime District 9, continue to be well received. 86% of the 450 units sold as at 30 June. So development of luxury condo is scheduled for completion in 2021. Okay, let's see whether do they still have anything left. We can go to that website again. Okay. Martin Modern, Martin Modern. Okay, total number of units 450, launch 438. Okay, sold is already 418 now, so only 20 left. Only 20 left. Okay, and again, same thing. You are talking about median price is 2007. Okay, lowest is 2006. Highest price is 2008. Okay, so gone were the days whereby I still remember, the sale, for information, the sale at Marina Bay Sands. Anybody want to make a guess now? When it's first launched, what is the per square foot price? The sale. Okay, of course, that was easily 20, yeah, about 800, 900. At that point in time, 800, people say crazy, Now we are talking about almost 3 times already. Okay, and in a span of, is it 20 years? Yeah, I remember 08. No, less than 20 years, less than 20 years. Okay, so that is actually happening right now. Okay, sorry, not 08, not 08. That was, I believe, was the sale is about last time was Ulu. I don't think so. Marina Bay, how can be Ulu? Okay, I think it was about 05, 06. I can't remember exactly. Yeah, you're right. Okay, there's nothing developed. So anyway, this is what's happening. Of course, the developers, I probably believe that they're laughing their way to the bank. Okay, so this is actually quite interesting. They are actually quite heavily invested in China right now. They have a few projects in China. The group is currently developing 3 large-scale developments in China. They are located in Shanghai and Chongqing, 2 of the largest and most well-connected cities with increasing urban population. Okay, so they have this Guoco Changfeng city, construction of city, gross floor area of 195,400. This is square meter, not square feet anymore. Okay, 195 square meter. So total is about 2 million square feet. Okay, the whole project is about 2 million square feet. Okay, and compared to Singapore, is definitely the scale is actually a lot wider. Mixed-use development comprising 2 18-story international grade office, 2 low-rise office building, cultural office building, cultural and entertainment center. Okay, they have the other one, 18T, a prime location in Chongqing historical neighborhoods next to Jiefang Bay. Okay, so Jiefang Bay is actually one of the main square. So 18T, the new landmark in Chongqing as well. So Chongqing Central Park project. December 2019, group was awarded 4 residential land parcel in Lianjiang new area of Chongqing Yubei. Resident development with a total gross floor area. Again, this is actually square meter, not square feet. 197 square meter. Development is located near Chongqing Central Park, the core region of Jiangbei new area. Plans to develop the area into Chongqing Key Regional Center with district administration function based in the prison. So Chongqing Central Park, largest open public urban park in China, 3rd largest in the world after New York Central Park and London's Hyde Park. So basically, this is their growth development. Of course, are they going to be successful? Are they going to make money out of this? That is a question mark, but you can see that, they are very actively pursuing a growth in their China. So it's a China growth story. Malaysia. So apparently Malaysia, they are not doing very well. Property market in Malaysia remains challenging. Wider economic political uncertainty continue to weigh on buyer sentiment. So they have positioned themselves for growth. All three of the group major development, Emirate Hills, Emirate 9, Gala Residence has seen healthy take-up rates. So it's actually still not too bad. Okay. 6 tests, profit past 5 positive. Yes, current ratio 4.93. Very good. Pass. Net profit margin 9. Very good. Interest cover. This one actually don't really meet the mark. So take note. So for developer, okay, if their operating cash flow doesn't pass, is it okay or not? Yes or no? Okay, is it okay for them to have, you know, certain of the cash flow for operations to be negative? Okay, it's okay. It's okay. So again, why is that so? Okay, you have to understand. Okay, for developer to buy land, no, it's not about cyclical. Okay, so for usually for companies that buy land, let's say a manufacturing company for buy land, okay, so that piece of land is actually under cash flow from investing activity or operating activity. Let's say it's a normal factory. A normal factory buy a piece of land to build another factory. Okay, is it, when they buy a land, is it cash flow for investing activities or cash flow from operating activities? Investing, operating. Thank you so much, investing. But for developers, okay, for developers, when they buy land, is actually for operating activities. Okay, like you can see here, inventories. Okay, they are probably parked it here. So of course, every time they buy land, right, is a huge investment, which will definitely result in their cash flow from operating to drop. Okay, so that's why for developers, this particular ratio is okay, it doesn't apply to them. This ratio, okay, doesn't apply to them at all. This test don't apply to them. Okay, so basically it's still not a pass. The interest cover is something of worry. I need this to be more than 3. Okay, the other thing interesting about this company is look at the PB, 0.45. So it's actually still very low. That means for every $1 of equity, I'm actually using 45 cents. Okay, now P ratio 43 times. Is this a concern or not? Yes or no? Okay, for developers, P ratio 43 times is a concern. Okay, thank you so much. No, I'm not a concern. Why? Because for them, it's actually very common for them to have very cyclical profits pattern. Okay, it really depends when they want to book their profits. The profits are actually very cyclical. Okay, so in this case, I wouldn't care so much about the PE. I will actually look at PB for developer, which is actually 0.45. Also, to me, this is actually quite interesting. Okay, DNU 3.5%. Okay, so this is what I have for GuocoLand. Anybody has any questions, comments, anything to add? Feel free to unmute yourself. Okay, please share. William, you want to talk about, have you been selling Martin Modern? Want to share? Or downtown, is it? What you call it again? Midtown Modern, anything to share? Didn't sell myself. Okay, thanks. Okay, so you probably have bought one also, right? Oh, okay, yeah. Okay, so for developer companies, we actually don't do DCF. We use the price to book as the main valuation method. Okay, so DCF is actually only good for companies whereby very likely their profit is actually quite stable. So that's why for developers, usually I don't do, I use price to book. So Grace, hopefully I answer your question.